This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on February 22nd, 2013. Our time is 8:43 Mountain, 10:43 Eastern. Radio show runs 6:30 CHED in Edmonton, News Talk 770 in Calgary, and News Talk 1010 in Toronto. For those that listen in Edmonton, next week we will be on at 3:30 to 4:30, just prior to the hockey game. So do not forget, we'll be on a half an hour later, 3:30 to 4:30. If you ever miss a radio show, you can catch us obviously on the radio, online on Harold's websites, rarecoloreddiamonds.com and HESradio.com. We have our podcast through iTunes as well. The show is portable through your iPhone, iPad, iPod, any portable device. All you need to do is put iTunes on there and type in World Financial Report on Radio. Our podcast is free. And Harold does daily updates on the markets as well, Monday through Friday. It's very, very popular. You can go and listen to it on his websites, or you can listen to it via the podcast as well. As we start taping today's show, it was an interesting week. The Fed came out and sort of rocked the markets a bit with comments regarding quantitative easing. It was from their minutes of their last meeting. And they didn't say they were going to stop buying $85 billion worth of bonds. They're obviously printing money and buying the bonds. They didn't say that, but people were trying to read tea leaves and read into the fact that maybe quantitative easing was going to be drawn back. But a lot of people believe that that is not going to be the case at all. So time will tell on that. Sequestration kicks in a matter of days, March 1st. We're talking about the U.S. government having to take a $1.2 trillion cut to their budget. In fact, the Pentagon said 800,000 workers would go on furlough as of March 1st if the politicians could not get it together. We're starting to see the impact of taxes being raised in the United States. Walmart came out during the week and said, America's poorest are broke, and there were secret emails that Bloomberg published. They are freaking out about it. Walmart is very, very concerned. We also saw a pullback in the metals market. A lot of it had to do with hedge funds moving out. We do know central bank buying is very, very strong. Individual investors buying physical gold and silver. We're seeing it go from weak hands to strong hands. The fundamentals are still very, very strong based on quantitative easing, zero interest rates, currency wars, nothing settled geopolitically or even with the sovereign debt crisis. In the United States, even the problems they have, they've kicked the can down the road. Harold, hot money rotating out for the short term. We have seen this many times in the 12 years we have done our show. One thing that you always said was we would see a lot of volatility as this market continued to go higher and higher, and that's what we're seeing. But volatility can be your friend if you do use it in an appropriate manner, and that is take advantage of it and buy the dips.
You bet, Randy. It almost feels this week, though, that we've been through 15 rounds with Muhammad Ali, I'll tell you.
Very true.
The last 3 weeks have been heavily down for the gold and silver, all the metals markets basically. At this particular point, and the reason for that is that you've got the hedge funds coming out of the marketplace. So, it just isn't the same market as it used to be in the sense that you've got these hedge funds that just can do whatever they want. They go in and out of the markets, and they pour money into the market, then they take it all back out, and that's what's causing the tremendous volatility. Gold has gone from $250 to $1,920. That's a tremendous move. It's now back down to $1,575. So a substantial pullback. But again, as Randy said at the beginning of the show, we've seen this many times. This is not the first time that we've seen this type of volatility in the gold and silver market. The silver market, the same thing. Silver went from $4 all the way up to $50, then back down to $26, back up to $35, $36, and now it's trading at $28.50. Now, this week we did break through two important support levels for gold and silver. We broke $1,600 gold, which meant that the next major level for gold, as far as support goes, is $15.25. For silver, we did break through the $28.50 level twice. that tells me that the market could literally go and test the lows of $26 that we saw back in 2011. So all in all, the markets are getting very close to their heavy support levels. If gold did break 1,500 or 1,520 and silver did break $26, I think that short term we could see gold drop down to about 1,350, and silver could literally drop down into the low 20s, the 2,150 to 2,350 level. That's if it did break those support levels, and again, it would take a lot for gold and silver to get through those price levels. The thing is that, you know, and every week we talk about it, and when the markets fall back, we say, well, the fundamentals haven't changed, you know, so our outlook for the market is the same. That's extremely true. Yeah, I mean, when you look at what's really happening in the marketplace and why you would need to own hard assets like gold and silver, diamonds, those type of thing, you know, the fact is that all those reasons are still there. But it doesn't feel any better when you see that, you know, markets that you've invested money in are dropping. And in fact, it's quite concerning, and sometimes we get emotional about it, and it forces you to make the wrong move. Again, we're not trading in the futures markets. You don't have that heavy leverage working against you that can take away all your money. If you own the physical gold and silver, which is what we've said for 13 years now, these are only corrections in a marketplace. And be sure that if all of a sudden we felt that things were getting way better in the U.S. economy and all the economies around the world were on the mend and getting better, we would say that the play in gold and silver is over. But that's the furthest thing in the world from the truth. Nothing has gotten better. In fact, it's gotten way worse. Also, Randy, at the beginning of the show, talked about Walmart. Walmart's the number one retailer in all of the world, especially in North America, and the fact is it's their clientele that got hurt the most by those tax increases. So as the retail sales numbers go down, there's no way in the world the economy is going to get better, because most of the spending that goes on in the United States, in Canada, and in all other countries is really done by the middle class, and the middle class is hurting at this point. They're not spending money. Then on top of that, you've got the people that are considered in the poor class, and they're not spending any money. So the fact is that the economy can't get better. The only thing that's happening at this point is that they're kicking the can down the road because they don't know what to do. And in 6 days from now, on March the 1st, they've got to make a decision. And when those when those cuts, you know, start to come into fruition, and all of a sudden they have to let 800,000 people go, that's not something that's going to go very easily, because the fact is that President Obama is all about creating jobs, not losing 800,000 jobs. But the problem is that the economy is so bad in the United States, I just don't see any way in the world that things are going to get better at this particular point. In fact, things are so dangerous that these markets will get so volatile that that's why you need to continue to hold your gold and silver, your diamonds, your hard assets like that as a protection against a market that could plummet in stocks and in bonds. So again, these are the most confusing, dangerous, and difficult times we've ever seen. On one hand, you got the gold and silver market that are selling off. On the other hand, we're reading the reports that Russia and China are buying every bit of physical gold that they can get their hands on. So how in the world does gold fall in the futures market when the physical market is so strong? The bottom line is that you've got two different markets. You've got the paper market, which is the futures market, and you've got the cash market. The problem is the prices are the same no matter what, because the physical price of gold and silver is really the same as what the futures prices are. So what we have to do at this point, we've just got to sit back and go through this correction and hope that $26 silver holds. And if $26 silver does hold, all of a sudden, you could see these markets come back very, very strong. Again, we've seen this many, many times. In fact, in 1980, when gold hit $850 and silver hit $52, that was the time when the markets hit its highest levels. The market reacted very similar to what it's doing right now. It sold off very heavily, scared out all of the futures traders, and then the market rallied to all-time highs in gold and silver. We saw that happen again in 2008 when all the stock markets around the world plummeted, gold and silver sold off heavily and then came back and made brand new highs. So again, do these situations concern me? You better believe they do. Again, I've been on the radio for 35 years. I've traded these markets for 35 years. And when I make a recommendation, I feel for it. I know a lot of people take our advice. A lot of people listen to our show, and a lot of people come to us for guidance and for, at times like this, reassurance that everything is going to be okay. Well, the fact is that nobody can control a market. The markets are controlled, by traders in essence, and at this particular point, it's like nothing we've ever seen because you've got these hedge funds that are in the market that trade billions and billions and billions of dollars, and then they pull out of a market. And when you pull billions of dollars out of a market like gold and silver that are smaller markets, the markets are going to react to the downside. But then they're going to come back into the markets at the right time too, because there's no way in the world that this play in gold and silver is over in any way, shape, or form. And the closer we get to that $26 platform in silver and $1,500 or $1,520 in gold, you're going to see, I think, some heavy buying coming back into the market. I have not sold a single ounce of gold or silver that I own. In actual fact, the markets are so weak at this particular point. The prices are so low that it's very difficult not to buy silver at $25 or $26. It's got to be a phenomenal buy at this point. So again, with everything happening in the world, we've never seen tremendous volatility like we're seeing at this particular point because the money levels are so much higher. But I've seen these moves in the markets before. I've seen them come down to these support levels, then I've seen the markets come back and make brand new highs, and that's what I do believe is going to happen. I still believe that we will see gold above $2,000, and I still believe we'll see silver at over $100 before this whole thing is over.
Speak with Worldwide Precious Metals, the company Harold recommends you use, a Canadian company in business for over 10 years. Their website, wwpmc.com, wwpmc.com. Speak with them. 1-866-623-2002. They can help you manage your precious metals investment account. You can trade the market if you want or just buy and hold. They're there to help you maximize the profit, minimize the risk, and please remember they're experts in a very specialized market. It's very important you deal with people that this is all they do. It's a liquid asset you can buy and sell with a phone call. It's important to have an allocation of precious metals at all times in your portfolio. Absolutely critical. And please remember that they have secure storage, insured to the full value of your investment, 24/7 online access, and you have full-time service from one of their precious metals experts. The telephone number, 1-866-623-2002. The website, wwpmc.com. One of the stories from our newsletter, you can get our newsletter from Worldwide. Call them. We send it out via email free of charge every Friday. I think this is one of the most critical stories we have had in a long, long time. It's from Business Insider. Art Cashin was quoted as saying, traders on the floor passing around this gloomy quote from investing god Seth Klarman. And this is the quote. It's from a year-end letter that he wrote. He said, investing today may well be harder than it has been at any time in our 3 decades of existence. He's talking about the company that he obviously is a part of. The Fed's relentless interventions and manipulations have left few purchase targets for his company. The underpinnings of our economy, and this is the important part, the underpinnings of our economy and financial system are so precarious that the unabating risks of collapse dwarf all other factors. I would encourage you to get that story, speak with Worldwide, get our free weekly newsletter. The telephone number, 1-866-623-2002. Their website, wwpmc.com. But get that story, read it in its entirety. I think when you hear something like that from a man that they consider an investing god, you have to take it very, very seriously. And one of the other stories that I thought was important, Greg Hunter. And it's very interesting to note that Greg Hunter's website, I think it's Watchdog USA or usawatchdog.com, It was attacked. We also had King World News. Their website was attacked. We know of other websites that have been attacked. So it is rather interesting that people trying to get the truth out at times, their websites are being attacked and somebody is doing it. We'd love to know who. Greg Hunter interviewed Eric Sprott from Sprott Asset Management, and he said the financial system at some point, it's going to blow. He manages $10 billion out of Toronto. He is worried about the global financial system. He says, there is this huge chaos going on in the financial business, which I think we all sense. They are using desperate measures here to hold it together. At some point it blows. There's no doubt about it. Sprott says the price of gold and silver are being suppressed because it's the canary in the coal mine. Rising prices in precious metals, according to Sprott, would tell people central bank policies are ridiculous and irresponsible. And people would realize with the price of gold and silver going up, that was the case. When it comes to silver, he says, people keep buying at a rate of 50 to 1 to gold. As far as gold is concerned, he contends physical demand for gold is out of line with supply. How can you have all these new people coming into the market when there's been no increase in supply for the last 12 years? And he says his analysis shows central banks are selling to make up for the shortfall and opines, I would hate to think what happens when we all find out there is no gold in the Treasury. But Eric Sprott very concerned that at some point we may have a major financial blow-up. As well, Harold, Seth Klarman saying, and this is, it. When I saw this story, it really hit me hard, risks of collapse dwarf all other factors, something that we all must take into account and have that insurance policy in your portfolio of hard assets.
You know, Randy, when we've been reading these things and hearing about them for quite some time now, and I think you almost at times get to be numb, or you sit back and say, well, what exactly does that mean, collapse? I mean, most of us find it almost impossible to believe that the financial system or the life that we're living on a day-to-day basis could change that dramatically. But, you know, if you look at the governments like an individual household, and I'm sure each of us can identify with this, that you have your business that, you know, brings in money to run your family and your home and everything like that, and you pay all your bills from it. Well, all of a sudden, if the husband or the wife is unemployed and that money no longer is coming in, then all of a sudden the bills don't get paid, and the bill collectors start to call, and then you start to lose certain things, your home, your mortgage, your cars, your everything like that. Well, the government is the same way. The thing is that the government has spent so much money, especially the U.S. government, that they're in debt for $20 trillion. They can't pay that money back because mathematically it's impossible. 50 cents out of every dollar that the U.S. government collects in tax revenue goes to pay the interest on the loans that they've got. Well, simple mathematics will tell you it's impossible to pay off those loans that way, and when you're spending half of your money on just interest, there's no doubt that that's a recipe for disaster. So when you look at what's happening in Europe with the sovereign debt situation, then you look at the $20 trillion that the U.S. owes. On top of that, business isn't good in the United States. The retail business is poor. Just look at what's happening with Walmart and that type of thing. Well, all of a sudden, it is possible that the markets can collapse, that the economies can collapse. But what does that mean to us as individuals? Does it mean that, you know, we all of a sudden lose all of our money or whatever? Well, the fact is that when currencies get devalued, look at what happened in Venezuela last week. They devalued their currency by 32%. That means that if you didn't have any hedges against that happening, if you just had your money in the bank and in investments, you woke up the next day and you were 32% poorer because you lost 30% of your 2% of your buying power. That's exactly what we're going to face within the very near future. The dollars are dropping in value and the cost of living is going up. Oil prices are still at $92, $93. The price of food is extremely high. And the fact is that these financial markets can crumble. It's happened in the past. It could definitely happen again. It's just a matter that what do we do as small investors? We're only small-time investors. We're hard-working, everyday Canadians, that just try to do the right thing. We work hard, we put some money away, we pay our bills, and whatever we have left goes into savings. What do you do with that money? And if these markets do change as dramatically as Sprott and Embry and all these other financial gurus say, then what in the world do we do about that? Again, I've been in business 35 years. I've been through some pretty tough times, and I've seen the markets do almost everything. These are the times that we get to be very conservative. We don't take unnecessary risks. We own everything that we want to own. We own our gold. We own our silver. We own our diamonds. We own our home. And the fact is that you don't take any unnecessary risks. You don't heavily leverage anything at this point, because the fact is leverage can work for you, but it can also work against you. And with the markets as volatile as they are, we just want to sit back and let the markets correct and do their thing and hope that we're in the right markets. Again, I'm very confident that we are. I know that we've made the right moves in the past, and I'm very comfortable with the positions that we're sitting in right now. And because we're not trading, again, we're not getting hurt by this. Again, do we wish the gold was at 2,000 right now? Of course we do. But wishing doesn't get the job done. We have no control over what the market does, but we have control over what we do, and it is now time to be very conservative and own the type of assets that will protect us against currency devaluation and high inflation, and both of those are coming.
The company that Harold recommends you use, start your own precious metals investment account today with Worldwide Precious Metals, a Canadian company in business for over 10 years. They are the experts in this very specialized field. Let them earn your business. Speak with them. www.pmc.com, telephone number 1-866-623-2002. Jim Sinclair said this week, and he correctly predicted gold would go to $1,650. He's predicting $3,500 gold now. He says QE to infinity, followed by gold balancing the balance sheets of the sovereign balance sheet disasters. Just as there is no tool other than QE to feign financial solvency, there is no tool to balance the balance sheets of the offending entities other than gold. It's just that simple. Also, Dennis Miller, not the comedian, but a financial guru who actually writes a column through KC Research, made a very interesting point during the week. He said, my friend Rob of We Buy Gold fame and I went to a coin show over the weekend. There is no junk silver to be found, and silver eagles were also in short supply. After speaking with several dealers, they felt the current downturn in the price of metals would be short-lived. Bill Fleckenstein said this week, and he's a hedge fund manager, we're into a phase where it doesn't matter what the news is, gold is just getting sold, and it's got a certain amount of momentum. When that happens on the upside, that's usually near the end of a move, and so I think we're probably near the end of the correction. Sentiment is quite low, and a lot of people have piled on in the short side. Meanwhile, physical demand continues to inhale metal. So we are set up for a low that gets made somewhere in the not-too-distant future. When it does, it could be kind of an explosive to the upside situation when the market finally turns. And we have about 30 seconds left here. Speak with Worldwide Precious Metals. Give them the chance to earn your business. Start your own precious metals investment account today. A Canadian company in business for over 10 years. You'll be dealing with a full-time precious metals expert, 24/7 online access. You'll have secure storage to the full value of your investment, and it's a liquid asset you can buy and sell with a phone call. Speak with Worldwide, 1-866-623-2002, www.pmc.com. Going to come back and talk about diamonds as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on February 22nd, 2013. Our time is 9:08 Mountain, 11:08 Eastern. Radio show runs on News Talk 1010 in Toronto, 630 CHED Edmonton, News Talk 770 in Calgary. For those that listen to our radio show in Edmonton, next week we are on at 3:30 due to the hockey game. And actually, over the next 2 weeks, we're going to be on at different times, so keep your head up. Listen to our radio show. We will let you know when we're on. It's all due to Oilers hockey, so Next week, 3:30 to 4:30 in Edmonton. We're on the radio. We're online. Herald's website's hesradio.com, rarecoloreddiamonds.com have the shows archived. We have our podcast as well. The show is portable through your iPad, your iPod, your iPhone. All you need to do is have iTunes on there. I've listened to the show on my iPhone, also listened to it on my mom's iPad, listened to it on my iMac, even my PC computer. And you can listen to us through iTunes, the podcast, World Financial Report on radio. To invest in precious metals, the company Herald recommends you use when it comes to investing in gold, silver, platinum, palladium, worldwide precious metals, wwpmc.com, 1-866-623-2002. You can get our free weekly newsletter from Worldwide. Also, rarecoloreddiamonds.com is Herald's website. Telephone number to speak with him personally and privately about diamonds, 1-800-432-1022. His auction website is hsfineauctions.com. We will let you know when the next auction comes up. This week's diamond, the featured diamond of the week, is a 2.16 carat pear-cut fancy, vivid, yellow, internally flawless. An absolutely stunning, beautiful diamond. You can see it online. You can see it in our newsletter. It is absolutely gorgeous, and we're still recovering from that amazing sale a couple of weeks ago, Sotheby's New York Jewel Sale, February 7, 2013, New York City, and two of the big items, and they blew the doors off things at the auction lot 359. A platinum fancy vivid purplish pink diamond and diamond ring from Tiffany & Company. The estimate on it $60,000 to $80,000, and it sold for $338,500 US dollars. And Harold talks about white diamonds as well, those rare D flawless. There was a platinum and diamond ring from Tiffany & Company. The estimate on it $100,000 to $150,000. It sold for $560,000 US. There's a white diamond, Harold, doing what we normally see the colored diamonds do, but we're excited about that because obviously you have white diamonds, you have those special D-XXX flawless diamonds too.
You bet, and I'm very, very proud of that, Randy. And, the stars of all the auctions now are the diamonds that we've been recommending now to all of our clients. So, congratulations to everybody that took our advice and got into the rare diamond market. Yellow diamonds are doing so well at auction. They're going for 2 or 3 times at times what the experts think that they were going to sell for. But the exciting thing, was that pink diamond. It was only a half a carat. When we talk about pink diamonds, are the most concentrated form of wealth in the world. These are small diamonds. A half a carat diamond is a small diamond. Now, this particular diamond that sold was a vivid purplish pink round, which is a very rare and beautiful cut and color. However, it was not an Argyle diamond, which sells for about half of what an Argyle diamond would sell for. But the beauty is that this beautiful little diamond ring that they thought was going to sell for just under $100,000, about $90,000, sold for 4 or 5 times that amount. So that's what we've been talking to you about. That's what we've been saying about the pink diamond market. 95% of the pink diamonds come from the Argyle mine. They produce these magnificent pinks, and in 2018, 5 years from now, this mine is going to close down. They're just not profitable anymore. They've tried to keep it open as long as they possibly could, but now the mine is going to close. 95% of the world's pink diamonds will be gone. You will not be able to get pink diamonds pretty well anymore. So, if this diamond that was supposed to sell for $90,000 ended up selling for, what was it, Randy, $338,000?
That's right, $338,500.
Which is 400% higher than what the experts at Sotheby's said it would sell for. Now, are we going to say that they don't know what they're talking about? Of course they know what they're talking about. Sotheby's has been in business for over 100 years, hundreds of years. They are one of the top firms of their type, auction firms in the world. And this diamond sold for 400% more than what they thought it would sell for, and that's just a sign of the times. Don't forget, in 2011, there was that 2.5 carat marquee, fancy, vivid yellow VVS1 diamond that was supposed to sell for $180,000 and sold for $960,000. And now you've got those D Flawlesses, which I brought up to you a while ago as one of the best investment diamonds you could ever buy. And sure enough, one just comes up for auction and sells for 4 times what it was supposed to. And last year, there was also some D Flawless white diamonds that sold for 3 times what they were supposed to. So, again, no matter what's happening in the world, the rare colored diamond market is on fire. The other thing that I love about it, I was just mentioning to Randy, was that, I get up early in the morning and I look at what the markets are doing, and sometimes I'm happy and sometimes I'm not, because, gold is either up or down, or silver and oil and those type of things. But you never see that happen with diamonds, because the fact is that gold and silver and commodities and stocks and bonds, they trade on exchanges. You can wake up in the morning or look at the Wall Street Journal, the financial pages, and say, gold did this or my stock did this, and you can track it every single day. That doesn't happen. You're never going to pick up, turn on the financial news and find out that yellow flawless or argyle pink diamonds, are up or down on the day. They don't trade on exchanges. You don't get that same type of buyer and seller mentality. And when you get to the pink diamond market, there's so few of them available that, again, the prices never ever go down in value. What we're going to see in argyle pinks, we're going to continue to see the same thing, go up by 25-30% a year. And as we get closer to the mine closing in 2018, we're going to start to see these diamonds double every year in 2. And then give it 2 or 3 years after the mine closes for all the diamonds to be gone, and you're talking that these diamonds will be 10 times what today's prices are. We're seeing it happen in auction right now. Why will we not see it when the diamond mine closes down? So I'm very, very excited about the diamond market. It's probably one of the best recommendations we've ever made, and our clients that own these diamonds are just absolutely ecstatic with what's happening in the marketplace. And again, just seeing what the auction results were last week just brings the biggest smile to my face. So again, you want to own yellow flawless diamonds. They go up by 25% a year. They double every 4 to 5 years. They in times of high inflation, have gone up 500% in 1980. Back in 1980, you could have bought one for $500. Now they're $20,000. 10 years from now, they'll be $100,000. That's why I give these diamonds to my children and grandchildren, because they're safe, and I want them to start with something, when they're ready to start in this world type of thing. The other diamonds are the D Flawless whites. One, they're phenomenal investments, which has just been proven by what's happening at auction. Number 2, there's a diamond fund starting in Europe. They're going to buy only D Flawless white diamonds between 1 to 5 carats. Buy these diamonds before the fund buys them out, because the prices are going to skyrocket. So we brought diamonds to you about 10 years ago with rarecoloreddiamonds.com, my website that, has gradually grown into probably the top website in the world for diamonds. In fact, just the other day, I was contacted by a company out of Israel that wanted to do business with us. And they sent me an email saying, Harold, you've got the most beautiful website. When we have clients that are looking at colored diamonds, we send them to your website for the education and for just all the information that our website gives. He says, and then we tell them to buy diamonds through us. This happens all the time. We put a lot of money and a lot of time and a lot of thought into our website, and we've got museum quality pieces. Within the next 2 weeks, you're going to see our new argyles. We just spent $40 million buying the next 2 years' production of all argyle diamonds. So the only place you're going to be able to buy argyle pink diamonds is through my company. We put up $40 million to make certain that our clients own the right type of diamonds to make the returns that you deserve to make. And with the markets as volatile as they are all over the world, we need an investment like these diamonds. These pink diamonds will make a lot of our clients very wealthy and will give you the money you need to retire. So between the yellow flawless diamonds, the argyle pink diamonds, and the D flawless whites, those are the 3 best diamonds classes to invest in. They start at $15,000 and go up from there. You can get involved in yellow flawlesses starting in the $15,000 to $20,000 level, and those diamonds can give you the type of returns that you need to retire in 10 years from now. The argyle pinks probably have about the biggest profit potential because the mine is going to close. It produces 95% of them, and this fund is going to eat up all the D flawless whites. Buy those diamonds and invest in them before so you can still get them. Now, the thing is, they're about 10 times as expensive as a normal white diamond, so they're not for everybody. They start at about $70,000 a carat. Randy, one other thing happened this week that I'm so blown away by and so proud of, because, again, it happened to our company. But we were approached a short while back by a firm that owned some of the rarest antique diamond and jewel pieces ever in existence. And many of them were Cartier pieces from the 1930s, even circa 1930. Many of the pieces, were during that Art Deco period, where these one-of-a-kind pieces just are works of art. Well, I guess these investors could have gone to Sotheby's or Christie's or any of the major firms in the world, but they choose my company. And we have, coming your way, $500 million worth of the rarest jewels that you have ever seen in your lifetime. I'm looking at these, and I'm just in disbelief, number one, that these type of jewels still exist in the world today, and then number two, that it was my company that was chosen as the firm to sell them. So, within the next few days, you're going to be able to view our catalog on rarecoloreddiamonds.com, and you're going to see some pieces that you just won't believe. One of the pieces that we just received, which took my breath away, was a 14-karat Colombian emerald, pure Colombian emerald from 1925 in a Cartier diamond setting. It is the most beautiful emerald diamond ring that you've ever seen in your lifetime, and one of the largest pure Colombian emeralds ever. These are the type of things, items that were given to us to sell. And again, I'm just blown away. We're putting together our online catalog, and we're cataloging every piece. There's another piece that is a 250-karat citrine bracelet, and it's a signed Cartier piece from 1930. It's diamond encrusted, 14-karat gold, 18-karat gold, and the most beautiful 250-karat Asher-cut citrine with a matching ring, and the ring is 70 carats. This is the type of antique jewels that was given to my firm to sell exclusively, and it's going to be made available to my clients in Canada and all around the world. The problem is that these are not inexpensive pieces. They start in the hundreds of thousands, and many of them go into the millions of dollars. But these are pieces that are one of a kind that you have never seen in your lifetime before. Most people have not seen them, and most of them are from the 1930s going into the late 1800s. These type of pieces are works of art. They've been in the Smithsonian, and they've been in other museums around the world, and now they're going to be available to our clients. I'm going to be in New York the first week of March, showing these privately. If there are investors out there that listen to our radio show that are interested in seeing this collection, please contact me, and I will show you in privacy parts of this collection that you just will not believe. So again, we're really heading heavily into the hard asset business. It's been my business for many, many years. I've traded the commodity markets for over 35 years, but the diamond market and now the rare gem market is a place to have your money in addition to physical gold and silver. Again, with everything that's happening, these are the assets that will give you the biggest return on your invested dollar. So again, stay tuned. You're going to see our new Argyles. We're just getting those photographed for you. We video every piece. And soon our online catalog for our Cartier and other pieces circa 1930 will be available starting next week.
RareColoredDiamonds.com. Speak with Harold personally and privately about investing in diamonds. RareColoredDiamonds.com. Telephone number 1-800-432-1022. Our featured diamond this week, a 2.16-carat pear-cut, fancy, vivid, yellow, internally flawless. And one of the things that we saw in the sale a couple of weeks ago at Sotheby's, yellow diamonds did very well. There was an 18-karat gold and fancy, deep brownish yellow diamond ring. The estimate on it, $180. It went for $230,500 U.S. There was also, and it's sort of interesting because this is a little bit different colored diamond than we normally talk about, but it was a platinum fancy brown yellow diamond and diamond ring. The estimate on it, $25,000, and it sold for $43,750. There was also two, and this is a platinum 18-karat, two-color gold fancy colored diamond and diamond ring. and it was a fancy purplish pink. The estimate on it, $35,000. It went for close to $44,000. Also, there was an 18-karat gold and fancy intense yellow diamond ring. The estimate on it, $80,000. It went for close to $100,000. There was a pair of platinum fancy intense yellow diamond and diamond earrings. The estimate on it, $175,000, went for $225,000. And we continue to go down the list on yellow diamonds. They all did very, very well. But one of the diamonds I wanted to touch on too, lot 12, it was an 18-karat gold fancy dark orange brown diamond and diamond ring. The estimate on it, $10,000. It went for $25,000. If you would like to see all the auction results from Sotheby's New York Jewel Sale, February 7, 2013 in New York City, speak with Harold. He'll be happy to send them out to you. RareColoredDiamonds.com or his telephone number, 1-800-432-1022, to speak with him personally and privately. And one thing that I wanted to touch on, Harold, it's a week where if you're a fan of the movies, it's like the Super Bowl for movie lovers because it's the Oscars. And we have insider knowledge that there are going to be a lot of Hollywood stars wearing pink diamonds on the red carpet. So if you're going to be watching the pre-show or when you're watching the Oscars, keep an eye out for the jewelry because there's going to be a lot of pink diamonds being worn by Hollywood stars. That has been pre-arranged as well. When they had the Grammys a few weeks back, Carrie Underwood, and we had the picture in our newsletter, Carrie Underwood was wearing $31 million worth of diamond. We know that she has a colored diamond as an engagement ring from Mike Fisher, who used to play with the Ottawa Senators, now the Nashville Predators, and Kelly Clarkson, music superstar. She was recently engaged, and she got a yellow diamond ring as an engagement ring. But, Harold, I wanted to give everyone a little heads up on the Oscars, so please keep an eye out. You will be seeing pink diamonds on that beautiful red carpet and people wearing them in the audience of the Oscars coming up on Sunday.
It's going to be exciting. I'll just be watching just for that fact alone, Randy, because I do love pink diamonds. And again, there's a reason. These pink diamonds are magnificent. They're the most concentrated form of wealth in the world because they're not large diamonds. Again, a half a carat diamond that was supposed to sell for about $90,000 ended up selling for $338,000 last week. If that doesn't tell you what's happening in the diamond market, I don't know what will. One other thing is that the featured diamond this week is such a rare diamond. First of all, vivid yellow is the best yellow diamond that you could possibly get. To get a diamond that's over 2 carats is nearly impossible today, and they are worth a fortune. Only one diamond in 15 million is over 2 carats, and I can guarantee you they're not a pear-shaped, vivid, yellow, flawless diamond. That diamond is so valuable, it will do nothing but make money.
One story we didn't really touch on, it was in the newsletter, but Bonham's auction is going to be featuring a rare blue diamond ring by Bulgari. Bonham's will auction an extremely rare 5.30 carat cushion-shaped deep blue diamond ring by Bulgari on April 24th in London. The ring, circa 1965, is set horizontally within a mounted pave set with brilliant cut diamonds and courses of baguette cut diamonds, and has a pre-sale estimate of $1.6 million to $2.4 million. We will keep an eye on this, Harold. It sort of goes back to what you were talking about with that collection that you're going to be obviously parceling off to individual investors. When you have items from the 60s, and obviously even you take it to another level of blue diamonds are very, very rare. Then you're getting into nature's art. This is like artwork that you would see when going to some of the greatest museums in the world, and we will keep an eye on that. I know that you have actually sold a few blue diamonds yourself.
Oh, you bet. Are you kidding? Blue diamonds next to red diamonds are the rarest of all, and we have sold some magnificent blue diamonds. What's happening now with pink diamonds happened with blue diamonds in 2005. The mine closed that produced these magnificent blues. They went from 200,000 to 1.4 million in 3 years after the mine closed, and now to get a vivid blue diamond, if you could ever possibly get one, they're over $2 million a carat. In fact, you'll pay whatever the market dictates, because that's exactly what's happening with blues. And now you've got another opportunity to do it with pinks. And I do believe that this will never happen again, because you've never had an asset class like pink and blue diamonds where there's such a small market. The yellow diamond market is a much larger market, except we only deal in flawless diamonds, which means there's only about 120 yellow flawless diamonds available for the whole world, and most of those are ours. Similar situation with D-flawless whites. There's only about 900 carats cut a year, and that's primarily what our cutters cut. So, again, you're talking tiny little markets that are easy to sell out, and like any other commodity, when they're sold out, the prices skyrocket. That's what happened with blues. That's now what's happening with pinks. If you can afford to get a pink diamond, that would be one of the best investments you could actually make. Sell out of your stocks. Get out of the stock market. It's so risky at this point, and put that money in an asset that's going to give you the type of returns that you need to make, to hit the numbers that you want for retirement and to have the proper life.
One of the stories that came out during the week is that there were a few hedge fund managers like George Soros that sold half of their position in gold. Well, George Soros is a trader, and we also know as well that he made a bet against the yen, and he supposedly made $1 billion in 1 month, so he might have been reallocating some money from gold into that short position on the yen. And when you hear these stories in the media, you have to make sure that you understand the complete story, not just the partial story. RareColoredDiamonds.com is the website. The telephone number, 1-800-432-1022, 1-800-432-1022 to speak with Harold personally and privately about diamonds. The company he recommends you use when it comes to investing in gold and silver, that is Worldwide Precious Metals. WWPMC.com is their website. Their telephone number is 1-800-432-1022. Start your own precious metals investment account today. You will have instant liquidity in and out of the market when you choose. Obviously, it's secured storage, insured to the full value of your investment, 24/7 online access, and a full-time expert, precious metals expert, to help you out with your precious metals investor account. 1-866-623-2002 to speak with them. Website www.pmc.com. You can get our free weekly newsletter from Harold or Worldwide. We have about 3 minutes left, and I want to repeat for those that might have missed this story, because I think this is one of the most critical stories we have heard in quite some time. It's in our newsletter. Art Cashin, traders on the floor, and he's talking about the stock exchange, are passing around this gloomy quote from investing god Seth Klarman. This is from an investment year-end letter that he sent out. Klarman says, investing today may well be harder than it has been at any time in our 3 decades of existence. The Fed's relentless interventions and manipulations have left few targets for his company to buy. The underpinnings of our economy and financial system are so precarious that the unabating risks of collapse dwarf all other factors. You heard right. Financial system so precarious that the unabating risk of collapse dwarf all other factors. This is from a guy they consider an investing god. He wrote a book. It's no longer in circulation. People pay thousands of dollars to acquire and read that book today. Harold, we have about 2 minutes left. But I thought that story was so important, because here is a guy who is a genius when it comes to investing. And he is that concerned about the markets. We should be as well. And that's why we're advocating having that insurance policy in your portfolio, gold, silver, and diamonds.
You bet. It's scary, Randy. It truly is. When you read and examine these type of articles that are written, especially with the caliber of people that are doing it, you've got to be concerned. I mean, we can't just sit back and say, whatever happens, happens, and misery loves company. If I lose my money, everybody's. We don't have to do that. 90% of the money is made by 10% of the people. We can be in that 10% if we just do the right thing. The right thing is to be very conservative, own hard assets, the type of assets that will protect you against the potential of what's coming up. And again, if it's possible that it could happen, and there's a strong possibility it will happen, then we've got to react to it. We can't just sit back and take the attitude, whatever happens type of thing. We have to be proactive, and I would say get into physical gold and silver, and definitely get yourself into that diamond market. The biggest profits, I believe, are going to be made in gold, silver, and these amazing pink, yellow, and deflawless diamonds. That's where most of the money is going to be made over the next several years.
Thank you very much, Harold Siegel, for another great show and your knowledge.
It's my pleasure. I wish everybody a wonderful weekend and a very profitable day.
Speak to Harold via rarecoloreddiamonds.com or call him at 1-800-432-1022. Featured diamond, 2.16 carat pear cut, fancy, vivid, yellow, internally flawless, absolutely stunning. It's a diamond you can see on the website. You can also see it in our free weekly newsletter. Harold recommends, when it comes to investing in diamonds, obviously rare colored diamonds for the metals, and this is a company he recommends you use, Worldwide Precious Metals, wwpmc.com, telephone number 1-866-623-2002. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. Remember, in Edmonton next week, we're on at 3:30. We will talk to you next week.